All right, so coming back to this problem again. So in our book, right, we're learning how to memorize transactions. So here we're attempting to create a bill that happens every single month. Now in this case, so we have the Sinclair Insurance. We're going to make sure that we recognize this is a monthly insurance. Okay, so, and it is for 600. Is it insurance expense or what are we doing? Are we doing prepaid insurance expense for 600? And it is a regular account. So I'm going to make sure I have some space here. So insurance expense, boom, for the amount, $600, memo. Is the memo just saying monthly insurance?
Actually, there's nothing in the memo.
Yeah, there's nothing there. Just a $600 and we're all good to go. So the next thing is going to happen is we want to memorize this transaction, and how we're going to memorize it. We're going to memorize it as enter insurance payment. Okay, which is okay. That's weird. Under the name field. Okay, so here is the bill. All right. So at the very top of the screen, you have this little button right here that says memorize. You're going to click that. Okay, and you're going to get this little window that says, oh, how do you want to memorize this exact thing? And I'm going to memorize it as insurance payment, is what the book says. Excuse me. Payment. All right, insurance payment. All right, now it's going to ask me, do I want to add it to my reminders list, or do not want to remind, or am I going to auto excuse me, am I going to automate this reminder? Am I going to have it do it often? Am I going to have it on the next date? So I can pretty much schedule when I want these reminders. So in this case, let's look at the book and see what they want us to do. So they want us to automate this transaction entry. Okay, good. And we want to have it for the next date. It's going to be for February 15. Okay. And it's going to be 11 and 0. So we're going to automate it, this transaction, by filling it in. And we're going to set the date for...
Oh, that's for the 15th, February 15th.
Yep, for February 15th, excuse me. Okay, for February 15. And it's going to be number of remindings. We want number of remindings. We want 11 of those reminders because it's every single month, right? So every month is going to remind us. And then days in advance to enter in. We don't need that, just as long as I get a reminder that I have this bill. And I'm going to go ahead and click OK. Now, once I've done that, if you heard very carefully to the sound bite, it was a picture. It's taking a screenshot of this. So here, we can go ahead and save and close. Okay? Now, watch this, what happens when since that report is memorized, I'm going to go ahead and type in another bill. Now, if I were to type in Sinclair, right? Just by me typing this in, boom, my entire thing is filled in except for the number of my amount that I'm putting in, because it could change every year. Or every month. But in this case, it filled in what I wanted to do, which is the expense number, right? So that's pretty much what a memorized report does. It just fills in the information of what the transaction is, and then you can toggle it, the number, on whatever it is. Okay. So I'm going to go ahead and close that out. Now, I'm going to go ahead and say no to that transaction. And I'm going to go to my lists, because if I go to lists, I should be able to see my memorized reports here.
Yeah, there it is, toward the bottom.
Towards the bottom, memorized reports. By me doing that, I recognize that, dude, that boom, I have one memorized transaction, and it is this exact bill payment right there, or this this bill that's reminding me that I need to pay for the insurance every month.
No,
Pretty
it
much
shows
it.
the rent, so is that because maybe it's a different date or something?
The rent,
We didn't enter that one.
we entered insurance.
Yeah, we didn't memorize that.
Oh, we didn't memorize the rent. Okay.
Yeah.
Okay.
Yeah, so in this case, it's just we only memorize the insurance
Okay.
since we know it's going to pay. So that's how you deal with that. And I'm actually going to have you guys read on how to either delete or, how to recreate these, memorized reports. Because it's pretty straightforward. Let's say I decided to call up that insurance and cancel its policy. I can just go up here. I can right click and delete it. Pretty straightforward. So I want you to read those pages. All right. We're almost done here, guys. Now, editing memorized reports. Again, you guys can read that on your own. It's pretty straightforward. You just double click on the title and fix whatever you need to do on there and save it again. All right, so I'm going to have you guys go ahead and read that. Now, the next part is very important because this is what happens when you need to close out the end of the year. Now, in this case, it gives you a little example right here. This is corporate. Okay? Why? How do I know that? Because we don't talk about preferred stocks or common stocks or any of those. We don't have dividends, and we don't definitely have we don't have retained earnings, okay? But don't worry about that. There is a section for just you guys, okay? And we'll get into it in a second. But this is what happens when when we reach the end of the accounting period and it's time to close up our books. So these are the necessary steps that you need to take when we are closing out the book. Okay, so this page is very important, so I want you to memorize this page. It's page 407 to 408. So what this is basically a list of all the things that you need to do to make sure that you properly close out your books. Now, if you guys remember the accounting cycle, right? This is going to be the steps 6 all the way to 10, right? Step 6 is to enter in all your adjustments. So that's the very first thing you got to do. You got to enter in your adjustments. And the first one they ask you to do is to adjust for depreciation, right? Adjust for all of your fixed assets. Okay? Second thing is going to be reconciling your bank statement, your credit card statement, anything like that, right? And then the third thing is going to be make sure you adjust your inventory, right? If you have periodic inventory, in this case we do not. We're under perpetual when it comes to QuickBooks. But it's also very, very kind of basic for you to make sure that you do a physical count before you close out your books. Just so that your QuickBooks matches what you actually have on hand and what's recorded. So you want to make sure that your inventory is adjusted there. Okay? And if you're on an accrual basis, make sure that you're doing the accounting correct. So pretty much all of these pretty much sum up to the end of the process. So I'm going to have you guys read that and kind of understand it yourself, right? Run the reports, right? Financial statements. This is the step number 6 here, right? And then lastly is to close your books out. And how do you close your books? Okay, well, here you go. Page 408 gives you it for sole proprietors, okay? So this is our main focus that we want to actually look at, Now, because you're certifying for the entire book, I can tell you this section right here, it's not truly a big huge part of the exam, just because, honestly, when it comes to QuickBooks, you have the advantage to choose between a sole proprietor, a partnership, or whatever kind of business entity, organization you want to be. So they don't really test you on this section per se, because it is tailored to what you're using QuickBooks for, whether you are going into using for a private small company or for a large corporation. So in this case, they don't really test you on this, but it's good to know, especially because we are beginner bookkeepers, right? We want to make sure that we understand how a small business slash sole proprietor works, or a partnership versus a corporation, right? Corporation is more advanced, right? You need to be certified in public accounting, which is a CPA. So for this case, I only want you to truly focus just around this little area here. So, and how we understand when we close out our books is, number one thing is we got to take out our owner's draw, and we gotta take it out of our owner's equity, right? If we choose to have an income summary instead of a retained earnings, so they're more or less the same thing. But the income summary, right? That's what we learned in sole proprietor, is we have an income summary. You're also going to close out your income summary to your equity, but in this case, they do it for you automatically. You don't need to take that extra step, because at the end of the day, it already transfers all of your profits into your equity automatically. You don't need to take any other extra step. I just repeated myself twice. Anyways, but the one thing that you do need to recognize is when you are closing out for the closing your books, you need to close your owner's draw. So if you take money out of the company, you need to make sure you properly make your adjustments to your equity so it matches. Okay, you're not going to write a check just for yourself, just for the heck of it. You have to decrease your equity, because ultimately you're taking money away from your company, not as a payment, but as part of what you've contributed originally to your company. So we're going to look into how to make that adjustment in a second. So first off, let's see for so this is for partnerships, right? When you're dealing with partnerships, right, you can distribute your profits amongst your partners evenly. So again, that's part of partnerships, which I don't want you to really know. But yeah, so first things first is, let's go ahead and dive right in, and let's say we decided to write a check to ourselves for how much? Let's see. We're going to write ourselves a check for $1,000. Okay, so let's go ahead and create that check. Okay, so here I'm going to go ahead and write a check. Now, it's only going to give you a few options that you can choose from. You either have checking, you have the monetary, the money market, the savings, or you have a journal entry. Now, you only use journal entries if you are using the $0 check. And in this case, we're not writing a $0 check, because we're not transferring invisible money. We're actually writing a check from our bank account. Okay? And we're going to write it out to the owners, which not Mr. Wong, so I don't know why this is there. Actually, let me clear out this transaction. That's not what I want. I want an actual clean one. There you go. Okay, and we are going from our checking account, not journal entry. So here, boom. Now, owners, or whatever name that we put in here. So in this case, we are Does that say Vern Black as the owner? So that's I'm gonna go ahead and
Looks like that.
Yeah, yeah, V, yeah, VERN.
VERN. No. Let me just type in black. Let me see what pops up. Nothing pops up.
Yeah, because it has, VEM, is that an M?
That's what I thought so too, but I can't see it. Let's see what the book says.
It's either an RM or EM.
All right. You know what? I'm going to make it that I'm the owner, right? I'm going to write myself the check. Or actually, I'm going to write it to Robert Sanchez. Let's say he's the owner, okay? Robert Sanchez, because I can always enter him in as a brand new person. So if I were to do that, okay, tab. All right, here you go. I'm going to quick add Robert Sanchez, and he's going to be considered other because he's not a vendor, right? He's definitely not a customer. And if you're the owner, you can't work for the company. So definitely not an employee. So he's going to fall under the categories of other. Okay? So here, there's no name. I'm not going to mail it to him, but let's make sure that the dates match up. So I'm going to say that this was done on the 30th of January. Okay, and for the amount, it's going to be, actually not an item, it's going to be an account, and it's going to be for owner's withdrawal. Oh, I don't see my account anywhere. Equity, equity, equity. Equity is a 3,000. Let me just type in equity. So equity, I only have equity equipment. Okay, well, I guess I need to make sure I have those. So before I do that, I'm going to cancel my transaction real quick. I'm going to click no. So what I'm going to do is I'm going to actually check my chart of accounts to see if I even have those accounts. Let me see. Owner, or I can look up by equity. EQUITY. So I only have opening balance for equity. I don't even have an owner's owner. No, I don't even have an owner's equity account. So what I'm going to do is I need to create those accounts, okay? Just so that I'm able to record this owner's withdrawal, right? Because ultimately, right, I guess because this company, right, I think it's an incorporated, so they have a different type of method, but I'm gonna go ahead and create my accounts real quick. Okay, so this one, I'm gonna create this first account. It's an equity account. And I'm going to name this one, where is my next button? Continue. I'm going to name this one Owner's Equity. All right, Owner's Equity. All right, and I'm going to go ahead and save. Okay, and then I'm going to go ahead and create another account. Okay, new. And let me check out the other account types. See if I have a different expense, other expense. It is an equity account. Other income, other expenses. Okay, so I guess it's another equity account. And I'm going to go ahead and click continue. And this time, this one's going to be for owner's withdrawal. Okay. And I'm going to click OK. Oh, I forgot to assign numbers.
Oh,
So let me go ahead and find where my equity accounts are. So here, they're the blank ones right here. Oh, nope. Keep going up. Equity, equity, equity. Here, I have a bunch of equity accounts here. So I have, see, I have capital stock. So this is just in case. So I have 3,000 used. I have 3,100 used. And yeah, so I'm gonna make this. All right, I'm gonna edit this right here and make sure. Oop, I double clicked it by accident, so I'm gonna go ahead and right click and edit. Okay, and I'm gonna make this account number 31000. Okay, and we're going to also change my owner's withdrawal. Owner's withdrawal. Where are you? Owner's withdrawal. Here, owner's withdrawal is going to be edit as 31200. Okay, so there you go. Now I have a completed owner's equity and an owner's withdrawal account there. Okay, so now I'm gonna go ahead and proceed with my check to write out a check for me. Okay, so it has to be checking, and I'm gonna say Robert Sanchez is the owner, and in this account I'm going to do an owner's withdrawal. Okay, for the amount of $1,000. And checking the date, I don't want the 15th. I'm going to say it was the 30th of January. And the check number is going to be that number right there. So I'm going to go ahead, click Save and Close. So now it says here, problem. Another check already has the number. Oh, okay. So that means we have to change the number to 335 and save and close. There you go. So in my check register, I have a check for 335 to Mr. Robert Sanchez, which is the owner. Okay. Now, if I were to go into my accounts, I'm going to see that if I type in. Okay, if I go into owner's withdrawal, here I have my check 335 for $1,000. So what I'm going to do is I'm going to take that away from my equity account. And in this case, because I just created my equity account and it's 0, that's okay because we just created it. So I'm not going to make a fuss out of it. But how to properly journalize to close out my my equity accounts, or not to close out to close out anything that affects your value of your company, right? If I took out money from my company, I have to make an adjustment. So I'm going to go to my company and I'm going to make a general journal trends entry. Okay, so again, same date is going to be for the 31st of January. All right, and this is going to be I'm going to say 2019-14. 2019-4, transaction number 4. In this case, I still need to recognize my journal entries. Right, that's number 1, so I can always find it where it is. And then I'm going to debit my owner's, I'm going to debit my owner's equity, right? Because I'm decreasing the value of my equity, right? I have to go in the opposite direction, which is a debit. I'm decreasing it. And then this account's going to be my owner's withdrawal. Okay? And it was for the amount of 1,000. And again, this has to match. And my entry is going to be close to equity. I'm going to copy this and I'm going to paste it here and paste it here. All right. So now I'm transferring by decreasing my equity, right? Because we understand a debit, what a debit does to equity accounts. It decreases it, right? And in this case, I am zeroing out my owner's withdrawal and placing it into my owner's equity. And then I can go ahead, click save and close. So boom. That's how you properly close out your books when it comes to a sole proprietor. Okay? And here you go. All right, here it is. My draw to my equity. All right. And then closing partnerships. Again, we don't care about partnerships. We're only focusing on that. Again, distributing net income is also profit sharing with your partner, so we don't care about that either. Last thing that we're going to be looking is setting up a closing date. So AKA, we're completely done with our books. It's all equal. We've printed out all of our financial forms. We're done. And we want to lock it up and throw away the key. Just kidding. In this case, we want to secure our transactions because we don't want anyone to have access to these and start messing with our financial statements, right? Once you've completed your cycle, that's it. You need to lock it away and store it in a file so that when your accountant or your tax accountant comes in and needs this file, they're going to use that file to do a proper auditing to make sure that you did your accounting correct. So that is what closing these books means. It literally means to lock it up. And there is a couple ways you can do it. Okay, so first thing you gotta do is you gotta establish what kind of closing date you're going to have. And in this case, it's going to be for January 30th because everything that we've done so far for the transactions has done for the month of January. Now you can go to company and set up a closing date, right? Set closing date. And that is one way you can do it. The way that the book shows you is to go to edit preferences, and then we're going to go to accounting. We're going to go to my company, and then we're going to, there's a section where you can set the closing date right here. And that's where you can actually go ahead and select this and say, so I'm going to close my date and I'm going to set a password. And in this case, I'm going to, it's going to ask me, am I going to, include my estimates and whatnot? Sure, why not? So what is my closing date? My closing date is going to be January, I'm way in 2020. I want to go January 2019. I think I went too far back. One more. There you go. I'm going to do January 31st. Now, let's see what your book says, actually. Just to make sure that January 31st is correct. December 31st is what it says for 2019. But that's okay. Because, my last transactions that I've done was for January, so I want to make sure that I wrap up that amount as well. Okay, because I just finished doing that. It's the end of my period, so I'm going to go ahead and say January 31st of 2019, right? Then it's going to ask me to set up a password. In this case, I believe they say ABC1234. Okay, ABC1234. And then I'm going to click OK. Well, in this case, I don't want to lock my file just yet. Okay, but this is how you do it. And once you've done this, okay, that means these things can never be opened unless you have permission from either the administration or the accountant. And this is only for accounting purposes, okay, for auditing, tax purposes, whatever you need it for. No regular employee should have access to this at all. Okay, unless someone who paid you in December decides to go to their bank and void a check, which is, uncommon. But for any transaction that does happen like that, or for example, you have a sales in December, but that person decides not to pay you and you have to correct that. So again, we looked at that when we looked in going back to transactions that had been locked away. Unfortunately, that's like the only time you'd be able to access it. And when you do access it, yes, it will affect your company's financial statements drastically. Okay. One small transaction is a chain reaction. It's going to just mess up a lot of things. So you want to be very careful on what you're going to be doing and how you're going to report that. All right, so I'm going to click cancel, but that's the two ways that you can set the closing date. Okay. All right. And that's it for chapter 13. I told you chapter 13 is very easy to read. It's very, very quick. So let's dive into this review questions. Okay, so select the best answer to each of the following. Okay, number 1, which of the following tasks does QuickBooks perform automatically at year end?
Let's see.
You said C, adjusts the balances in the retained earnings account. Yes. Okay. So in sole proprietor language, it adjusts the equity and it adjusts the income summary for you automatically. Yes, that is true. Remember when I told you? When the only thing that you need to adjust is if you took money out of the company or you invested money into the company. Because QuickBooks would automatically transfer the profits into equity without you having to do it. Where in accounting, when we did it for the first time, we had to transfer all of our income to our income summary. We had to transfer all of our expenses into income summary, and then we had to transfer all of our income summary into equity, right? QuickBooks does it for you. All you need to do is just you're responsible for just adjusting for your owner's withdrawal. So yes, C is correct. Number 2, entering a date in the closing date field achieves which of the following?
See again.
C, locks the data file so that no unauthorized users can add, change, or delete transactions. And yes, that is true. That is the whole point of why we close out the date, is to lock our files away so that no one can tamper with those files. Yes. C is true. All right. Question number 3, voiding and deleting transactions both do the following. Okay. A. Oh, go ahead.
I have a,
Okay, we got one person that says A. To keep the record of the data number and data or transaction. Okay, now does voiding keep the transaction?
no, it sure doesn't. No, it doesn't.
What about deleting? For sure, deleting, it leaves holes in your book. So A cannot be correct at all. All right. Can you do B? Completely remove all details on the transaction.
Yes.
That's for deleting, but voiding, no, it's still there. Okay. C, zero out the debits and credits specified by the transaction. Yes, voiding zeroes it out. Deleting also zeroes it out. So C is the correct answer. So D, both B and C will obviously be inaccurate. So C is the correct answer. All right. Number 4, to make an adjustment to items as well as to the accounts, associated accounts, create a what?
C,
General,
$0 check.
Okay. This
for the
is
item,
for the item, it is C, but this is for items and or accounts.
Oh, items and accounts, okay. Okay,
okay, so I mean, I had A, but,
no, it's not D.
yeah, I had A, but I don't, I'm not really sure.
Oops.
It's not memorized transaction because that's,
Yeah,
Oh, shoot. I'm sorry.
it's okay.
Yeah, sorry. I dropped my CD disc thingy. Oh, okay.
Oh, good.
All right, sorry about that. So, okay. Now,
Oh, was,
I mean, it's, me, it's either A or C.
okay. Well, all right, let's explore it. So, general journal, right? We saw what it can do, right? Now, this one is, right? When we do general journal, you can only use your accounts. So, A is actually the wrong answer.
So it's only, accounts.
Yes. For general journal, you can only have an account. So let's.
Not do items.
You cannot do items. Look, check. I'll even check it out for you. Okay. So if I were to go to. So let me go ahead and go in here, and I'm going to create make a general journal. So here, when I do that, what does it say up here?
accounts.
Okay. Let me attempt to put an item number in here, or an item. Nope, no item.
Okay, no item.
Okay, but let's go ahead and check out that $0 check. So Andrea was correct. So write a check, right? And I want to do journal entries. Okay, so here for expenses, you have the account right here. You can also go to items and type in the item right here. So here, using the $0 check, it can do both account and both items.
Okay,
So good job, Andrea. You were right.
okay.
Totally off on this, on all of it so far.
Oh, really?
Well, number two, I right.
Okay.
So, I don't know what happened.
All right.
Um,
All right. Last one.
that's a C for the $0. Okay, for the, that's where you can find the items
And the accounts.
And
and
the
the
account,
account.
right.
Mm-hmm.
Okay.
Where the general journal is only the account. So no items. All
Right.
right. And we didn't talk about fixed asset, and we didn't talk about memorized transaction. There are those to do the adjustments. We never use those two. So it's either A or C.
Wait
A,
a minute, yeah, I did say A or C.
yeah. Yeah, but A is
I
only.
was leaning towards A though, so I had to count myself wrong on that.
Yeah. All right. Last question is question number 5. At the end of the year, you should perform the following. So, what are the things that you need to perform?
Well, for sure A,
For sure, A.
say that we're gonna do a physical inventory. So
Right.
those two,
For sure.
get all of the above.
Yeah, it's all the above.
It is all the above, and you can find this answer on page 408. All right, 408 gives you the list of all. No, wait, actually, no. No. I apologize. That's looking at the sole proprietor. For the adjustments, it's the one that has like 10 steps on it.
Right, yeah.
Right here, closing the books, right here. So it is, oh wait, I was right, 407 to 408.
Yeah, sure.
Okay, so yes, so if you read this list of items, you'll see that, okay, yeah, you're right. First one is A. Third one is B. And then I think the fourth step is letter C. Okay, so yeah, all of the above is correct. Okay, well, since today is Monday, I want you guys to kind of just rest, and I want you to come up with all of the questions that you need for tomorrow's lecture. Okay, we have 4 hours to answer everything and anything that you want. Okay.